Hello, welcome all. This is Abhilash. So in this lecture, I am going to talk on the economic of banks and its performance with the role of RBI. So let's start with the role of the Reserve Bank of India. That means RBI. The Reserve Bank of India is the central bank of India and was established on the April 1st, 1935, in accordance with the provisions of Reserve Bank of India Act 1934. So this RBI is the Central Bank of India and is it was established on 1st April 1935 under the Act Indian Act 1934. Since its inception, it has been headquartered in Mumbai. Through originally privately owned, RBI has been fully owned by Government of India since nationalizations in 1949. RBI is governed by a central board headed by a governor appointed by the central government. RBI has 22 original offices across India. The Reserve Bank of India was set up on the recommendations of the Hilton and Commission. So RBI was set up on the recommendation by the Hilton and Commissions. So it was a British commission. Functions of RBI: monetary authority, formulates, implements, and monitors the monitor policy. Objectives: maintaining price stability and ensuring adequate flow of credit to productive sectors. Regulator and supervisor of the financial systems. So RBI is the regulating and supervising the financial system, all bankings, NBFCs, finance homes, everything is handling by the RBI. They are providing the regulations, everything. Right, the prescribes broad parameters of banking operations within which the country's banking and financial system functions. The main objective of the RBI is the maintain public confidence in the system, right? The protect depositor interest and provide cost-effective banking service to the public. The banking ombudsman scheme has been formulated by the Reserve Bank of India for effective redressal of complaints by banking customers. So you may right now we have heard about the we have discussed about the monetary policy. So let's understand what is the monetary policy. Monetary policy is a set of tools that a nation's central bank has available to promote sustainable economic growth by controlling the overall supply of money that is available to the nation's bank, its consumers, and its businesses. The goal is to keep the economic humping along at the rate that is higher, neither too hot or not too cold. The central bank may force up interest rates on borrowing in order to discourage spending and or force down interest rates to inspire more borrowing and spending. The main weapon at its disposal is nation's money. The central bank sets the rate it changes to loan money to nation's bank. When it raises or lower its rates, all financial institutions tweak the rates they charge all of their customers, from big businesses borrowing for major projects to home buyers applying for mortgage. All of those customers are rate sensitive. They are more likely to borrow when rates are low and put up borrowing when rates are high. Functions of RBI continue. Manager of Foreign Exchange and Control manages the foreign exchange through Foreign Exchange Management Act 1999. Foreign transactions, transfers. It has been and it's continues handled by the manages by the Foreign Exchange. Objective of the manager of the foreign exchange control to facilitate extreme trade and payment and promote orderly development and maintenance of foreign exchange market in India. Issue of currency issues and exchange or destroys currency and coins not fit for circulation. The objective of the currency issues of issuers of currency to give the public adequate quantity of supplies of currency notes and coins and in a good quality. Development role perform a wide range of promotional function to support national objectives. Banker to the government performs merchant banking functions for the central and the state governments also act as their banker. Banker to banks maintain banking accounts for all scheduled banks. So you might have heard about the Patsanstha, Nagari Patsanstha Bank, scheduled banks, right? So they have their main account in the nationalized bank, international bank. So this is the one of the main important function, the maintaining banking accounts for all scheduled banks, right? Owner and operator of the depository, SGL and NDS for government bonds. Supervisory functions. In addition to its traditional central functions, the Reserve Bank has certain non-monetary functions of the nature of supervision of banks and promoting of sound banking in India. The Reserve Bank Act 1934, the Banking Regulation Act 1949 has given RBI wide powers of supervision and control over commercial and cooperative banks relating to the licensing, establishment, branch expansion, liquidity of their assets, management, and methods of working, amalgamation, reconstruction, and liquidation. The RBI is authorized to carry out periodical inspection of the banks and to call for written and necessary information for them. The supervisory functions of the RBI have helped a great deal in improving the standard of banking in India to develop on sound lines and to improve the methods of their operation. Promotional functions. The Reserve Bank now performs a variety of development and promotional functions. The Reserve Bank promotes banking habit, extend banking facilities to rural, semi-rural urban areas, and establish and promote new specialized function agencies. The Reserve Bank has helped in setting up the IFCI and the SFC. It, it set up the Deposit Insurance Corporation of India in 1963 and Industrial Reconstruction Corporation of India 1975. These institutions were set up directly or indirectly by the RBI to promote having saving the habit and mobilize savings and to promote industrial finance as well as agriculture finance. The RBI set up the Agriculture Credit Department in 1935 to provide agriculture credit. The bank has developed the cooperative credit movement to encourage saving, to eliminate money lenders from the village, and its route its short-term credit to agriculture. The RBI has set up the Agriculture Finance and Development Corporation to provide long-term finance to farmers. Product and service offered by banks. The different products in a bank can be broadly classified into retail banking, the trade finance, treasury operations, and retail bank. Retail banking and trade finance operations are conducted at a branch level, while the wholesale banking operations, which cover treasury operations, are at the head office or designated branch of the particular bank. Retail banking, in the retail banking, deposits, loan, cash credits, overdraft, negotiation of loans, advances, remittance, bookkeeping, maintaining all accounting records, receiving all kind of bonds valuable for safekeeping. This all done in the retail banking. That whatever we have accounts, saving accounts, their accounts in the bank, that all are considered under the retail banking. Trade finance, issuing, accompanying of letter of credit, drawing, accepting, discounting, buying, selling, collecting of bills of exchange, promissory notes, drafts, bill of lending, and other securities. So this all are done in the under the trade finance. So where borrowers are borrowing the money from the banks with the letter of credit, with the promissory notes, bill of exchange, bill of lending, and other securities. Treasury operations, buying and selling of bullion, foreign exchange, acquiring, holding, underwriting, and dealing in shares, debentures, etc. Purchasing and selling of bonds and security on behalf of constitution. It's done in the treasury operations. The banks can also act as an agent of the government of local authority. They ensure, guarantee, underwrite, participate in managing and carrying out issue of shares debenture. Apart from the above mentioned functions of the bank provides a whole lot of other services like investment counseling for individuals, short-term fund management, and portfolio management for individuals and companies. It undertakes the inward and outward inventory maintenance with the reference to foreign exchange and collection of varied type of the government. Common banking product available: credit card, debit card. You know all the details. I don't want to take a time here to explain credit card, debit card, right? What is credit card, debit card? You know all things. Nowadays, each and every person having 2 to 3 debit cards, credit cards as well, right? So automated teller machine, ATM also, EPF, electronic fund transfer, NFT, IPSC, telebanking, mobile banking also. You know nowadays everyone is having a mobile. Their digital banking is available with every bank, so you can do the bank fund transfer from the mobile bank only, right? So internet banking, on the from the website you have to make the transaction, you have to log in with your credentials, right? So here some benefits are available on the internet banking. Reduce the transaction cost of offering several banking service and diminishes the need for the longer number of expensive brick and mortar branches of staff. It helps you to save your time. You can do your internet banking from your home, right? So all our banking covers many services. These basic services have always been recognized as a hallmark of the genuine bankers. These are the receipt of the consumer deposits, the collection of the checks drawn on the other banks, right? The payment of customer check drawn on his safe. There are other various types of banking services like advances, overdraft, cash credit, deposit, saving, credit, deposits, saving, current account, CASA, current account, saving account, financial services, bill discounting, foreign services providing foreign currency, traveler checks, money transfer, transition fund transfer, saving, fixed deposits, service of place or time ATM, status is debit and credit card. These all are the services which is offered by the Indian banks under the RBI regulations. So we will stop here, and in the next session we will talk about the banking regulation. Thank you. Best wishes.